Have you ever sent money abroad? I mean, it costs an arm and a leg because you've got the foreign exchange, you've basically got, the fees, then there might be some intermittent banks and all this kind of stuff, or intermediary banks. Now, if you have a Bitcoin wallet and the other person has a Bitcoin wallet, you can do it at a fraction of the cost, like for 50 pence or something, and it'll take you 10 minutes as opposed to 3 to 5 working days. It is revolutionary. And anybody that has anybody in the middle, it's taking them out. And the banks are crapping themselves, and they are telling everybody not, no, while in the meantime they're building because they don't want to be left behind.
So, good morning, everybody, and welcome to this month's special guest interview for the Inner Circle group, an amazing group. Marcus, this is the cream of the crop. This is the top of the mastermind tree. This is everybody who is already crushing it in their businesses and is now looking to invest, do other cool things. So many people on here are investing in property and diversifying and buying companies, which is what this group is all about this year, right? So obviously, what came up in one of the meetings that we were interested in discussing about kind of maybe investing in shares or equities or things like that. And I thought, there's so much BS in this world. There are not many people that I trust, but you are one of the people that I trust. We've known each other, probably 15 years, I reckon, at least, something like that. So I wanted to get you in. So before we kick off, can you take me through, give us a bit of your background, a bit of your story, and what you do at Investment Mastery, and then let's start diving. I'm going to dive into some Q&A from me about what you're looking at right now, what you see the market doing, what your top tips are, and then we can start to take some wider questions. But let's get your background and then do a bit of a kind of market synopsis update in terms of what you're seeing, because you've trained like 2,500 students, something like that, I think.
Probably more than that, probably by now. Yeah.
Cool.
I'll give you a quick introduction, a quick one. So I've been trading for 20 years. I started because I didn't know what else to do really, and one thing that I didn't want to do really was to take my money out of my account ever. So I started kind of teaching friends and family, and just really basic, very, very, very simple strategies. We generally teach people who are just starting out, that just the fundamental basics, because you can make it so incredibly complex, and I just think life is complex enough. You don't need to make it complex. And the challenge that most people have is people want to make money fast. That's the biggest problem that people have. They basically come to me and they want to make a living off it, which is fine. And then I ask them, how much money do you have? And they say, well, I've got $2,000. Okay, so you basically want to do 100 to 200% a month. Is that what you're telling me? Oh, I didn't think of that. And that's a problem, isn't it? Clearly. Or maybe not, I don't know. Maybe that's a limiting belief, but anyway. So we teach people how to make anywhere from kind of 3 to 6% a month, which I know sounds like a lot. It does, but let's just focus on 3% a month. And we do it in quite simple ways. We do a mixture of investing and a mixture of trading, and we try and say it's only 20 minutes a day. Don't spend more than 20 minutes a day, because if you do that, you drive yourself crazy. Life is not about trading. Trading is just a vehicle. And if you don't like the word trading, use investing. I mean, it's just a word, and it has to fit into your lifestyle. That's the most important thing. If you try and squeeze it in somewhere, it's just not going to work. So we say 20 minutes a day at the same time every day. So it's like brushing teeth. You don't go, oh, God, I can't believe I have to brush my teeth again. You just do it because it's a habit. So if you get into that habit, and that's because there's 3 stages of habits, right? The first stage is the unbearable stage, and that's where most people quit. But once you get past that, it becomes easier, and then you're invincible. But
so what are the 3 stages? Just break it down. So that unbearable is stage 1.
Oh, no, I knew you were going to ask me that. Okay, let me come back to you on that.
Stuff like that, I'm going to go there, mate.
That's good. I will come back to that, and if I can't do it within this, I will come back to you.
All right.
But the third stage is unstoppable.
Right.
So number 1 is unbearable. Then there's the second stage.
We'll come back to that then.
Yeah, but that's where most people give up. Listen, this is no different to anything else, right? It's one of the 5 pillars of wealth. If you think about people have their career, some people. Then they have, what do they do? Generally set up their own business. They're actually self-employed, but anyway, at some stage they might have a business. Then they might get into real estate or something like that. Then the kind of the new kid on the block is the internet, which I think it's big enough for us to say it's different to business, and then there's trading and investing, and trading and investing is the one that's the least understood, because of course the boys in the city, they don't want people to know. They don't, because otherwise their gravy train is over. 3-4% a year just for doing what? Just for holding your money and just following what the market does. So you're investing in the same stocks that make up the FTSE 100. I don't need you for that. I can just buy an ETF, an exchange traded fund, and follow the market myself. What do I need you for? In fact, when it falls, knowing that on average markets rise around 7% a year on average, every time it falls, why don't I just buy some more? I'll dollar cost down, or pound cost down, or what is it, euro cost down, and I'll outperform the market. But of course the general public aren't taught this, so therefore they give their money to somebody else, other people in the city, because they have nice brochures. And the glossier the brochure, the worse it is, if you think about it, because where did that brochure come from? That came from the management fees. So I'm all about an investment mastery. I'm all about people taking control of their own finances. And that's what we're all about. And we have groups of people who literally have 12 different family members learning this together. And in the evening, that's what they talk about. So honey, so how was school today? Oh, that's right. So how was university? Great. All right. So what are we going to do? Are we going to buy some gold? Or no, let's get into silver, or let's short the market. And it's brilliant. And I think that's a conversation that needs to be had, I think.
Yeah. So I think, thanks, Andy, by the way, for giving us the 3: unbearable, uncomfortable, and unstoppable. So well done,
Thank
Andy.
you.
Great.
Uncomfortable. Thank you. Let me write that down.
Yeah. There you go. So I think the cool thing is here, you've got some sophisticated investors on this call, right? So people here are getting 10% per annum on property, various different things like that. I don't actually know who does invest currently in the stock market. Like who on the call, just out of interest, who does it? Who doesn't do it? Just okay, great. So you got a bit of a mix of people who do it and don't do it. So let's kind of just get your market overview. Where do you? I mean, obviously it's been kind of crazy, right? And lots of big stocks that were typically very profitable back in February, if you take airlines and stuff like that, have fallen off a cliff. But even Buffett sold in March, didn't he? Sold a load of his stuff in March because I'm pretty sure he thinks he's still got further to fall. But what's your read on the market currently? What do you think's going on?
Okay, let me also caveat that a little bit. From a trading point of view, it doesn't really matter where the market is going. So when journalists call me and kind of say, so what are the 3 stocks, or what are the 3 sectors and all this, I just, oh man, you're asking that question that shows me that, it's like you make money going up and down. Let's stop this paradigm. There are 3 ways of making money: up, down, and sideways. And because if you're locked into just one way of making money, then you've got 1 in 3 chance of making money. And any statistician will, I can't say the word, will basically tell you that is bad odds. So you've got to do all 3.
Just break that down for those, and I'm going to go just for me, because I'm not sure I would understand all of those. Just so. Okay. Right. So what are the 3s? Obviously, when the market goes up, when the market goes down, what's when the market goes sideways? Just explain that one.
Right. So in the bull market, it's clear that, and that's what funds do. So unless they're a hedge fund, most mutual funds, most pension funds, most insurance funds, they will just buy. So in the other 2 market movements, they're either not making you any money, which is losing your time, return on time invested, as opposed to just return on investment, or they're losing you money. And that's shocking. So therefore, and it's really difficult for a fund to make money, actually. I don't know how they do it. If you can only make money going up, I wouldn't be able to do it. So the other way is obviously the bear market. And normally, on average, bear markets last around 2 years. And that's kind of good to know. And that's why Warren is kind of taking his, we're on first name terms, he's taking his money out, because obviously he's waiting for it to come down so he can go in big, and he will. And he'll let everybody know when he does that. You can short the market when that happens. He said he's not doing deals that are less than $40 million. Well, his biggest challenge that he has is that he has too much money. So he needs to buy into big companies. But when he sees a nice boutique company that he thinks has got really low debt and has got good return on their internal capital, and they're growing their earnings per share 15 to 30% per annum, then he'll want to go in. But the problem is he'll have to buy the whole company, which he does often. He'll buy the company and just let them get on with it. He doesn't get involved in anything, which is quite clever, actually.
Yeah, he has $183 billion in cash right now.
Yeah.
That's quite a lot of cash. Even
that
Jeff
is
could
a
spend
good
that.
problem to have. Yeah. But it is a problem. Let's be real, because it is a problem.
Right.
Or a challenge, if you like, if you want to be positive. But it is, because he has to make that grow. And the bigger the money, the more difficult it is, because you've got to also diversify. Now, he's the person that actually says, people who diversify don't know what they're doing. What he actually means is people who over-diversify don't know what they're doing. So, for example, when I started in the crypto market in 2016, I bought everything. I bought 120 different cryptos and about 60 ICOs, initial coin offerings. And the reason was I didn't have a clue what I was doing. So I needed to diversify. But then some go up, some go down, so you never make any money. Right. So he's of the ilk of, look, some people say don't put all your eggs into one basket. He's put your eggs into one basket and watch it really carefully. He's that guy. There's two different guys. George Soros is like that as well. But most fund managers just don't want to lose their job. So what they do is they buy, like 50 to 100 different companies, and then they go, oh, look, we've made you 3% a year. And it's just like, really? Well, thank you. Because of inflation. The third way of making money, of course, is sideways, where you just go in and out, in and out, in and out, and you kind of take advantage of the choppiness or oscillation, if you like, or rolling of the market. And we do all three. We start people off with the buying strategy, but we do all three. Now, before I get into that, do you guys understand selling short? Do you understand it? Could anybody explain it?
Oh, that's a different question, right?
That's a different question. Okay, so everybody knows you can buy low and sell high, yeah? Everybody knows that.
Right.
But you can also sell high and buy low. And people go, how can I do that? Well, there's only 4 buttons. Buy and sell, done. You know that. The other one is the other button number 3 and button number 4. And that is sell high, called sell short, and buy low, and that is called buy to cover your position. So if you think it's going up, you press button number 1, and then you sell at some stage. If you think it's going down, you press button number 3. So it's really simple. There's only 4 buttons. Now, here's the thing. As soon as you press that button, the broker knows you don't have the stock. And so lends it to you. Now you have it to do with what you like, and that is sell into the market. The only one thing that you need to remember is that you do need to buy it back. Why? Because it's not yours. It belongs to the broker. Well, actually, it doesn't even belong to him, but let's not go into that rabbit hole. And so you need to give it back to the broker. Okay, that's buy to cover your position. It actually is really simple, but it really blows people's minds. So I'll give you a small analogy. Let's say I go on holiday and I've just bought a brand new car. So Jonathan, you love cars, yes? I can tell you're a man who loves cars.
He's probably the one on the call that doesn't, actually.
Damn it! I took the wrong one. Okay, so let's just say I give you my car key and off I go. Okay. You think to yourself, well, I've already got a car, so you decide to sell the car. So let's say you sell the car for 60K, okay? And that comes into it's not your car, by the way, but I'm gone for a year, so why not? So basically, you have 60 grand come in. You're very happy. There's only one problem. It's my car. So I might ring you up and I might say, hey, Jonathan, how are you? You all right? How's the family? Everything okay? And blah, 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 we talk. And then you're bound to ask me one question, which is, Marcus, when are you coming back? Right? And I'll say, oh, isn't that nice? So basically, what happens is, oh dear. So what happens is that you need to, I'll say to you, I'll be back in 1 month. Yeah? So what do you now need to do?
Buy a car. Hopefully it's depreciated, so I'll spend 50 grand on it and take the 10K and give you your car back.
And that's it. You basically had 60K come in. The car's now worth less, let's say 45K. You do have to go out and buy one. And it has to be a 1-year-old, same model. Can't be a Fiat Punto or something. And then you pocket the difference, right? The 15K. And that's it. That's basically it. So it's not an exact example, but that's as close as you're going to get. Yeah.
Okay. I know a couple of people on the call want to talk about crypto, so we should definitely spend some time talking about crypto. So
I am so loving cryptos at the moment. Cryptos is where we're making all of our money at the moment.
Is that right?
Yeah, for sure.
Okay.
Because if you think about it, stocks, you wouldn't believe this. Actually, they're not that volatile. I know people think they are, but they're really not. Then you have foreign exchange. So when you go to the airport and you exchange your money for another currency, and that is a lot more volatile. And also it's open 24/5. So for 5 days a week, it's open all day and all night. And then came the new one, which is basically, literally, 24/7, 24/7. Cryptocurrencies is a new form of money. But there's a lot more to it, because what holds the whole thing up is the blockchain. Okay, so I want you to imagine that you are sending some money to somebody else. Maybe you're paying with a Visa card, or you're sending money or whatever. In the centralized current system, there's always somebody in the middle. And that somebody in the middle takes time and wants money. So they're slowing it down and they're making it more expensive, like a bank or a central bank, Visa card, PayPal or whatever. Okay. So in the new system, the decentralized system, there isn't that person in the middle. They've taken it away. Right. However, how do you trust that other person? Because something has to be in the middle, like a big spreadsheet, to say Marcus minus some money, minus 10, and the other person plus some money, plus 10, because that has to go from me to here. And that's called a ledger, right, in the accountant speak. Big ledger in the sky. That's what the blockchain does. It puts there all the transactions, and it's immutable. In other words, it can't be hacked into and changed. Now, you might have heard it has been hacked. It hasn't been hacked. So there's loads of use cases for this. So imagine now, have you ever sent money abroad? I mean, it costs an arm and a leg, because you've got the foreign exchange. You've basically got, the fees. Then there might be some intermittent banks and all this kind of stuff, or intermediary banks. Now, if you have a Bitcoin wallet and the other person has a Bitcoin wallet, you can do it at a fraction of the cost, like for 50 pence or something, and it'll take you 10 minutes as opposed to 3 to 5 working days. It is revolutionary. And anybody that has anybody in the middle, it's taking them out. And the banks are crapping themselves, and they are telling everybody not, no, while in the meantime, they're building, because they don't want to be left behind. So JP Morgan, for example, the biggest kind of anti-Bitcoin person in 2017, it's only for drug lords and all this kind of stuff, as if they don't use, money or gold or anything like that. So was basically saying that, avoid. And this is what he was doing. Watch this, okay? Listen, my clients, my high net worth and my millions of clients out there, do not buy it. Do not buy it. Are you ready yet? Have you built it? You can't make any money. Do not buy it. It is, it's a scam. It's nothing. It's a Ponzi scheme. Are we ready? Almost. Okay, one more time. And by the way, this is proven. When he once made this public announcement that it was all rubbish, it went down by 20%. And guess whose traders, this is public knowledge, it's public record, whose traders were the ones that bought the most at that stage? JP Morgan. I mean, these guys, honestly, they are...
They call it smart money, right?
Smart money, yeah.
Yeah.
There's another word for that, but yeah, smart money. Okay. We're ready to make money. Okay. And then he launched his own coin, the JP Morgan coin. Strange that, based on the blockchain. Amazing. They're all coming out with it. Institutions are lining up to get in. And the reason is because of the use cases that are slowly but surely happening. So, for example, how do you know that the food that's in the supermarket really 100% is organic or is Wagyu beef that you're paying 10 times more? In the blockchain with your phone, you can just check it, because it cannot be. I want you to imagine little blocks of work, okay, that are done by hundreds of thousands, not one bank, but hundreds of thousands of computers called miners. They're doing this work. They don't want to do it for nothing. They get paid. They get paid Bitcoin for doing it, okay? And there is an event that happened a few days ago called the halving, or some people call it the halvening, which basically means, and that happens every 4 years, the amount of Bitcoin that is paid to the miners is halved. Well, what does that mean? Your fiat money, we're printing. Here we go again. Here we go again. We're going to QE15, or I said probably only number 3, but it's going to go again and again and again, and all this money is going to go into the market. So what does that mean? What does that mean for your fiat money? The money in your pocket is going to go down. Supply and demand. There's too much supply. So with Bitcoin, every 4 years, the amount of Bitcoin that is given to the miners is halved. So it has the opposite effect. So the supply isn't going up, the supply is going down, and the rate in which it is being printed, actually mined, is going down. What does that mean? The price is going to go up, which is really, really interesting. Plus, with Bitcoin, only 21 million will ever be mined, ever. So what does that mean? It's finite. Well, what does that mean? Supply and demand. So if you wanted some, you wanted some, you wanted some. If everybody wanted some, well, I've already got some. So not everybody can have some. The other thing that you need to know, you probably know this, is that Bitcoin right now is worth about $9,500, something like that, per Bitcoin. And people go, oh, that's expensive, I can't buy it. No, no, no. You can buy up to 100 millionth of a Bitcoin, and that's called 1 Satoshi. And that's
I didn't know that.
Satoshi Nakamoto. Yeah, so you can buy it with $50, $100 if you wanted to. And by the way, the white paper was written in 2008 in direct response to the financial crisis, where it became very clear that the very few, the 1 to 3%, controlled all the finances. But when it goes to shit, we bail them out. And this either guy or group of people, nobody knows, said, right, we are going to change the financial system, and we're going to create something which isn't worth less and less and less and less in the average person's pocket, but it's worth more and more and more. Got a question for you, by the way. Who is the owner and founder of Facebook?
Mark Zuckerberg.
Mark Zuckerberg? Everybody agree?
Yes. Yeah.
Yeah. And the reason is because the value that is captured on the web is in the application. So in other words, well, let me ask you a question. Who invented the internet? I mean,
it was a British guy.
That's bigger than Facebook.
Isn't it a British guy? It was a British guy.
He is a British guy, but what's his name? And is he a multi-billionaire?
No, because he didn't. He gave it for free.
Yeah, that's right. Okay. So the internet is based on any application being on top, like the Googles and the Facebooks. They're the ones that make all the money, right? So in the blockchain, it's the opposite. They've democratized the way that it happens, so that if you are the one that is using the Facebook of the blockchain, and you are liking and you are posting, you get paid the tokens. And as the company grows, like Facebook, when your tokens that you got, they become worth more in value. Can you see the difference? Mark Zuckerberg makes the billions. We don't. We just use it. Right? We get advertised to. We do the likes. We should be the ones, because without us, he has nothing. Right? So it's a totally different model. They've turned it upside down. So every time, so for example, there's the Brave browser, and this is a coin which is a really good coin called BAT, Basic Attention Token. And every time you use that browser, if you want to be advertised to, you switch it on and you will get tokens, which makes sense. I should get paid, right? Why should Mark Zuckerberg get paid? What the fuck? I'm the one that's being advertised to, right? Every time I do it, there's another one called pre-search. They're taking on Google. Every time I do a search, I get paid a token because I am the one using it. So it isn't Google that's worth, well, it's fine if pre-search is worth a lot, but then I'm going to make money through it. Does that make sense? So it's like getting into Amazon and Facebook and Google, and that's what we're doing. We're trying to get in at the beginning. You know, when Mark Zuckerberg said to, I think 6 people or 4 people, come to my dormitory, some people turned up, some people didn't. Big mistake. And then some people invested and some didn't. Big mistake. And so we're getting in right at the beginning by just using it, which is, I think, amazing. Also, they're tokenizing entire buildings now. So imagine you have Trump Tower. Well, Trump Tower's just sitting there and it's worth billions, isn't it?
Right.
So I'm sure, I wouldn't, but I'm sure that there's people out there, and you wouldn't either probably, but you would buy a fraction of a tiny tile or stone or window or whatever for $1,000. And then there's a secondary marketplace that's buying and selling bits of the White House, Buckingham Palace. That's never going to happen, but I'm saying buildings, basically, right? The Taj Mahal. Right? If the Indian government is bust and they're going, right, how can we raise some money? All right, let's do that then. One of the most beautiful buildings in the world. It's, it's 100,000 per centimeter. I'll tell you what, there'll be a market for that. I own a bit of the Taj Mahal, mate.
Fraser, I can see you selling off bits of your property empire already. I can see Fraser's brain sitting there going, I can turn my property empire into more cash flow.
It's going to happen. It's going to happen. People have phones in Africa. They don't have banks. So if they have a phone and they have tokens, they can start getting involved in buying assets that they never, ever had access to. It democratizes finance. There's a huge shift that's happening. There's around 3 to 4 billion. I can't believe I'm saying 3 to 4. That's a billion difference. But anyway, roughly, that don't have access to banking. But now, because of their mobile phone and the blockchain, they do. Because you're your own bank. In other words, if you lose the code to your Ethereum wallet, and by the way, remember this, Bitcoin wallet to Bitcoin wallet. You can't send Bitcoin to an Ethereum wallet. You can't send Bitcoin to Dash. It's Bitcoin to Bitcoin, Dash to Dash, Ethereum to Ethereum, right? And if you lose your coins, you're done, right? So it is a decentralized system where you are in control. That's the good side. Bad side, you are in control. Do you know how many millions of Bitcoin have been lost? There's a guy called Laszlo in 2010 who bought 2 pizzas for 10,000 Bitcoin. Do you know what they're worth right now?
900,000.
90 million.
And he's lost them.
Well,
the pizza guy's doing great.
I really hope that he ate the entire pizza. You know how you leave the crust?
That would be bad.
Can you imagine? Do you want me to show you a couple of strategies? I'll take you like through a couple of things that I think might be quite interesting for you. So I'm just going to share this now. All right. So I don't know whether you know this, but in 2017, Bitcoin, which is blockchain 1.0, the first one, Ethereum is 2.0, and then there's some 3.0 and 4.0, and each one is slightly better than the other one. And I don't know whether you know this, but in 2017, it basically went from 1,000 to 20,000. I mean, that's insane. It's too much, too fast, shouldn't have happened, but that's the market. And then you get the opposite reaction. So now it's come down and staying down for too long. And that's what tends to happen in markets. It's just what markets do. And then it came down. So let's say we're here right now. It came down 89%. So my question for this group is, not seeing that it's come down 89%, are you a little bit nervous about getting in? Hands up if you're a little bit nervous. Well, a little bit, because it could go a lot further, right?
Yeah.
Okay. Oh, hold on a moment. Oh, Paul, did you put these slides together? I sent them to you earlier. Did I? This is actually, hold on. This is the wrong date. This is 2000 and hold on. What happened after that? Ah, it went up 6,600%. So you should have invested really. Anyway, let's come back to today. All right, so we know it went to 2,000. It's at around 9,500. So who's a little bit nervous about investing now? Still? Oh, more people than last time. Andy put up, because you didn't put up your hand last. Now you put up your hand. Okay. Oh, Paul, what have you done? It's the wrong slide again. This is back in time. What happened? It went up 1,000%. You should have got in, you see. Why? Because we're in a secular bull market. Supply and demand. There's less and less of these things happening. Right? And if you keep going, I won't go on, but basically, it just goes on and on and on. The last time it fell. Now, what's so interesting, we're at this stage here, okay? And then now it's starting to go back up again, and we're at around this mark here. But look at all the massive falls. You can't even see them, can you? And that's where charts are like, they scare people because, trading and investing is all about the fear and greed. And when people see that, they're fearful. But actually, this is when they should be greedy, which is that famous quote by Warren Buffett, isn't it? Yeah. Always be greedy when other people are being fearful. So that's where we are right now. And I believe that Bitcoin will go to 100,000. Now, other people believe 500,000 and 1 million. But let me tell you my rationale behind it. I don't think that Bitcoin is the new, it is like a currency because it's too slow. It's like the blockchain 1.0. It was the first one. It's like the T model of Ford. You know, it's great, but at some stage you're going to get something better. But what it is going to be, in my opinion, is a store of value, like gold. You don't go in the shop and chuck them some gold. It's a store of value, right? Now, all the gold that has been brought up from the ground is worth around $8 trillion. Okay. Now, Bitcoin is a much better store of value because where do you store your gold? It's not that easy. How do I send it to Andy? How do I do that? Put it in the post? It's never going to arrive. How do I pay? Do I scratch off a little bit and pay somebody for a loaf of bread? It's really tough, right? Bitcoin, you go to 100 millionth of a Bitcoin called one Satoshi. You store it on the blockchain, no problem at all. I can send it to you within 10 minutes. Does that make sense? So it's like a digital gold. And people say, yeah, but it's never going to. No, it's going to be in tandem. The two are going to coexist. It's the new digital gold, right? So if you put 21 million, which is the number that's ever going to be in existence, into 8 trillion, you come to $400,000 per Bitcoin. Now, because I'm an investor, I'm a bit safe, I like to halve it to 200,000, and just to be sure, I'll halve it again. And that's how I come to 100,000. It's a little bit like this, but that's what I think is going to happen. And I'm not going to be like John McAfee. He's somebody who famously said, if Bitcoin doesn't go to 500,000 in 3 years, I will chew off my own penis. Now, I'm not sure why somebody would give a time frame to that. I mean, how stupid must you be? So there's actually a website which has a countdown to the time when he has to eat his own penis.
Is he taking yoga classes? Because that's going to be a hard one to pull off.
Yeah, he used to be a yoga instructor. That's part of the. Everybody thinks that he's going to manage to do it. Anyway, let me give you a couple of other things. Oh, I want to quickly show you my account here quickly because I want you to understand something that that you don't see very often, right? Have you ever seen? You know, some of you probably do a bit of investing in stocks and stuff. Have you ever seen positions where an account has 10,000, 4,000? This is percent. 3,000, 2,000, 2,000, 2,000, 1,001. I mean, I haven't in 20 years, and I've only seen it in cryptos. It is ridiculous. But you do need to have a bit of a stomach, or because it fluctuates like crazy. You know, 20,000, 3,500, then 12,000, then 4,000, then 10,000, then it went to, I think, recently went to around 5,500, and now you know, at 8,000. So as long as you believe, and this is my whole theory on which my investment strategy is based. Okay, you might want to write this down. That's not bad after 40 minutes. One thing which is worth writing down, which is only invest in something that you believe cannot go to zero. Gold, silver, copper, I mean, even oil. And we can have this debate whether oil is going to go to zero. Oil is not going to go to zero. The futures went to zero, but oil is not going to go to zero. And once you do that, you can use my value cost averaging strategy, which I'm going to show you in just a second. Very important that you also understand is that I believe that where are we in the technological curve? We're right at the beginning. So, you know, people say, oh, well, everybody's bought it now. You must be joking. Like, the institutions haven't even gotten in yet.
Really? Seriously, they haven't even got in?
They can't. They're not allowed. There's two reasons. Okay, the infrastructure is being built. When a big institution buys something, they need to have something called custodial services, because you can't buy it and hold it. Because you might go, oh, I've lost it. No, mate. If you're buying it, somebody else has to hold it for you. They're called a custodial service. And so what that means is that that hasn't been the case in the crypto world until now. Okay, so I'm going to show you this. Fidelity here, can you see my screen? Fidelity, with 27 million users, has just launched its custody and execution for institutions. This is brand new. TD Ameritrade with 11 million users. Why? Because they're going to make a shed load of money out of it. They've figured out how to do it, which is to build a platform that their users just can come on. Morgan Stanley, Citigroup. Look at this, the owner of the New York Stock Exchange. You know, because I think if you talk to people out there, they'd go, like this. Well, that's just like your grandparents being offered this plastic thing called a credit card and saying, okay, you don't have to use money anymore, use this. And they're going to go, I don't think so. It's exactly the same. Do you remember the first time that you went WH Smith and they told you to do self-service? And you were like, no, I'm not doing self-service. I want to be bloody well served by somebody, thank you very much. Now I'm just like, bleep, 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 I want to do it myself. Technology, you know, if something is faster and cheaper, people will adopt it as long as it's as safe as before. If it's just cheaper, if it's just faster, if it's cheaper and faster, game over. By the way, you all know that Facebook is creating its own digital currency, yes, called Libra?
Yeah, well, what happened with that? Because a lot of people were in it and then pulled out of it.
Correct. Yeah, you had to put at least 10 million in order to be a founding member, and then a lot of people pulled out. But part of the reason they pulled out is because they're creating their own digital currency.
Right.
And also they got a lot of heat, which they maybe thought that they couldn't afford from the government, who had a knee-jerk reaction and said, this is going to seriously impact on the dollar. And that's how powerful digital currencies are. But by the way, just so we're very clear, Libra, okay, is not a cryptocurrency. It's a digital currency. Tell me why it can't be a cryptocurrency. Somebody tell me why. What is one of the main bits? Okay, I'm going to show you consumer A, consumer, and the person receiving it. What's in the middle?
Platform, bank, somebody else.
Yeah, centralized, controlled. They can inflate, deflate, confiscate, you know, like in Cyprus, go into people's bank accounts. Anybody over 100,000 just take it. What? You know, but you can't do that when you have a decentralized system, because one person controls it. Here, Libra and Facebook is a centralized system. Who controls it? Mark Zuckerberg. That is not what the Bitcoin and all that is about. These governments, and China, by the way, has, you know, it has created its own digital currency. They've been working on it for 6 years. But it's not a cryptocurrency, it's a digital currency. And it's very important that we understand the difference. And what people are going to do is they're going to rush towards these digital currencies because they're rubber stamped by the government. But then they're going to look around and say, oh, there's this other thing called Bitcoin and Ethereum, which is decentralized, which serves me. And this is a blessing that the governments are in it. If they would just say, no, 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 that would be bad. But they're saying, oh, we're going to do our own version. That is good, because that means adoption will come. That is a good thing. By the way, I want you to know that 2017 didn't have any institutional money in it at all. And when you think that it went from 1,000 to 20,000 without any institutional money, how much are you going to invest? 2 grand, 20 grand, 200 grand? How much do you think institutions are going to invest?
Yeah, millions.
Yeah. Poor Tudor Jones, he's worth about, is it 8 billion? He's the 132 richest man in the world. His fund just committed to putting 2% of everything that they have under management into Bitcoin. That is groundbreaking news, guys. Do you know why? Because the fund managers, they're kind of quite careful, and they want somebody else to go first. So you can say, well, he did it, so you can't find me. I was just following what he did. And he's the first to do it. All these things are happening all at the same time, okay? And also it's tiny. Look at this. Did you know that Apple has more money in a bank account than all cryptocurrencies put together? It's tiny. So when the money comes in, like from institutions, it's just going to blow up. Let me just go through this. Scarcity. This is very important. Very important. Okay. 21 million Bitcoin will ever be mined. I already told you that. But I told you about the halving. Every 4 years, there's less Bitcoins that are in circulation. So last time this happened, some coins just went up. And please write this down. 6 to 18 months afterwards, because it takes time for the market to understand what's going on and then to react. 6 to 18 months afterwards, in the last 2 times, it just went ballistic. And Bitcoin will do well, but it's the other coins that we're looking for. It's the new Bitcoins. It's the one that go up 1,000,000%. I know that sounds stupid. It is. I don't even it is stupid, but that's what happens in cryptos. So this is where we are right now. Okay. I can't see my thing here. This is where we are right now. So according to this, and this is just a mathematical thing, it doesn't include lots of things like adoption and stuff like that. It should take up to around 200,000 per Bitcoin. I don't think it will. I think it'll go up to 100,000, but we'll see. We'll see. Either is fine with me. Okay, I want to show. Oh, these are my kids' account, by the way. Look at this. These are my 9 and 11-year-old. Look at these percentage gains. Bitcoin 98%, Bitcoin 373%. So you can see what I'm investing in. Can you see that? I mean, you probably want to know what I'm investing in. Gold, silver, cryptos. Gold, silver, cryptos. And the fourth one, please write this down, is an inverse ETF. That is an exchange traded fund that might have the FTSE 250, for example, but it's inversed. So instead of me shorting, which costs me a little bit of money on a monthly basis, I buy an inverse ETF, which means that when the market comes down, my ETF goes up. Now, here's a golden nugget. Please make sure you do not buy a leveraged ETF, which is ×2 or ×3. People don't realize. They go, oh, inverse, great. And what they're doing is they're buying an instrument that's there for trading. So if the stock market goes down, the inverse ETF goes up 3 times as much as it's gone down, which is amazing if you're trading. But when you're investing, you can't do that because you pay for it almost on a daily basis. You lose a little bit of money. It's leverage. So when you do an ETF, which is inverse, make sure it's just a one-time, just a normal inverse ETF. All right. Okay. Now, if you want to start, and this answers some of your questions here that you guys had, you probably need to open a fiat account. Now, things are changing all the time. You might be able to go direct to your crypto broker or account or exchange. But generally speaking, you need to open a fiat account first. Why? Because you need to exchange your pounds to Bitcoin. That's the very first thing you need to do. And there's lots of people doing that, but aren't a crypto exchange where you can buy all the other coins. So that they're 2 very different things. Okay. So Coinbase, for example, is one. And that is also, you can also buy lots of other coins on there as well. So it's kind of a fiat exchange and a crypto exchange. Kraken is a pretty good one. Gemini, but that's in the States. So probably you want to go for Kraken if you possibly can. That's probably a good one to use. Okay, then you need to buy some Bitcoin. So you convert it, very simple. You just buy some Bitcoin, yeah. Bitpanda is also a good one to use, by the way, Bitpanda. Yeah. Okay. And then you need to open a crypto exchange. Now, there are lots, well, when I say lots, there are actually not that many, but I have about 9 different ones, but Binance is probably the largest one in the world. Coinbase, which is also a crypto exchange, is probably the biggest in America, but Binance is a Chinese one and it has hundreds of cryptocurrencies and you really need to go outside of it to buy other coins. And that's where we do our trading. Now, this is incredibly important. Hold on, if you're going to take a picture, let me get to the end of it. Go on, now you can take a picture because then you got everything. All right, so basically what's very important is that once you've bought the Bitcoin, you're going to have it in your digital Bitcoin wallet, like a wallet, but digital, okay? When you open up your crypto exchange like Binance or KuCoin, Huobi or BitMEX or Bittrex, they're all good ones. You need to send from your Bitcoin wallet on your fiat to your Bitcoin wallet on your crypto exchange. Now, you must do this. Please write this down. There is no ifs, buts, or maybes. You must do this. You always send a small amount first. If it has arrived, you send the whole lot. Trust me, been there, done that, lost thousands. Don't do it. Also, never type in the code. The code of your address is quite long and it's got capital letters, small letters. You must cut and paste. Never type it out. One little mistake. It was a capital I, you put in a small I, it's gone into the ether. You are your own bank. There is nobody in the middle. You can't phone up Mr. Bitcoin and say, listen, I made a little bit of a mistake. So Bitcoin, there's no person. See the pros and cons between centralization and decentralization? You can phone up NatWest and say, I made a mistake. I don't know where I sent it to. They'll go, all right, don't worry, we'll find it for you. Okay, so that's very important indeed. Okay, next. And by the way, all of this sounds like it's, but actually it is actually quite simple. Once it's like riding a bike. My kids think they can't do it. They're crying and there's blood everywhere, but I know they can. I really think.
Are you talking about trading now or riding the bike, just so we're clear?
Actually, I'm talking about riding a bike. Okay, there's several wallet. Now, you must store it in a wallet. Don't keep it on an exchange. Why? Because if you've got millions in there, what, you want somebody to hack it? Exchanges are hackable. That's when you hear about exchanges, they're hackable. Another hack, that's an exchange. It's not the blockchain, it's the exchange. The exchange is the weak point. Now, Binance got hacked and then gave everybody their money back, which was very cool. That's very cool, right? So they kept some aside just in case. They said, don't worry, we got you covered, and they gave everybody's Bitcoins back. Now, that is what I like to see. But otherwise, take it off the exchange. Now, if this coin is built on Ethereum, Ethereum is where lots of applications like Facebook, etc., will be built. That's why I really like Ethereum. You can send your coin to myetherwallet.com. But that is an online wallet. It's called a hot wallet. It's hackable. Now, it hasn't been hacked yet, but it is theoretically, it is hackable. Why? Because it's on the internet. Or you can download the wallet onto your laptop. Makes it a little bit safer. But can people hack into your laptop? And I think the answer is yes. But if you wanted to do that, it's atomic. Okay. Now, what you really want to do, though, is you want to take it off the system. That's a cold wallet. The only time it's on is if you get and I'll show you a picture of it, these two things. The one on the left is a nano ledger. It's like a USB stick, but it's a special one. Or a Trezor. Oh, hold on. Now you can take it. So you are going to be on there doing some stuff for maybe 5 minutes, which theoretically people could hack within that 5 minutes if they knew you were on during that 5 minutes on your laptop. Very unlikely. And then you take it off, and now it is absolutely safe. Nobody can steal it at all. Now, people think that they're downloading their Bitcoin and Ethereum off the blockchain. No, everything is on the blockchain. You just send it to a different address, but it's on the blockchain. It fries people's brains. You go, so I'm downloading it onto my nano ledger, am I? No, you're just sending it to that address, and then you're disconnecting, and therefore nobody can hack it right now. And therefore it's safe. Okay, so it's a slight kind of distinction. Now, one thing, and this is a golden nugget again, when you buy a hard wallet, you choose either the ledger or the other one, you need to go direct to their website. You cannot buy it off eBay. Do not use somebody's secondhand one, because anybody could, and I know this sounds horrible, but somebody could put a little virus in there, which as soon as you plug it in, sends them your Bitcoin. It's the Wild West, I'm afraid. So therefore, ledger.com, trezor.io, that's where you have to get. And these are not my websites or anything like that. These are the official places that you get it. Okay? Right, now what I'm going to do is I'm going to go to the strategies, otherwise you guys are going to kill me, I think. Oh, by the way, when you then want to track it, cointracker.io is, it will link up to all your exchanges, draw down all the information, you press the button, you have to pay them for this, but it will do your tax returns for you. It'll calculate how much tax you just say, I'm in the UK, this is how much I pay, boom, and it'll calculate everything for you.
Let's just check in with everyone. Is everyone getting value out of this so far? Yes, just checking in. Anyone's brains fried? Yeah, Jeff's brains fried.
Yeah. Let me just go to the strategies, I think. All right.
Vish, this is all right for you? Yeah, Vish is it. Steve, how's your brain?
All right, okay. So I'm going to show you a really simple strategy for you to use. Really simple, okay? How many of you have heard of something called dollar cost averaging.
That's because I've seen you speak before.
Right. Dollar cost averaging is a very famous technique that funds use, where every month they will buy a little bit more, right? So they'll buy it here, next month they'll buy it here, next month they'll buy it here. You see where I'm going with this, yeah? They buy it every single month. What do you think happens then? You get an average price. Because if you put all your money in, how do you know you didn't buy here and now you're in loss for the rest of the year? Because look, this was the highest point. Oh, damn, what a shame. So instead of that, you just chop up your money and you put a little bit in every single month. And sometimes it's low, sometimes it's high, but you get an average price. So instead of the price being at 37.5, it's probably going to be at 35. Now, you might say that's not a big difference, but percentage-wise, yeah, that is a big difference. That's about 7.5%. So, yeah, I'll go for that. Does that make sense? Now, I think that's a crap strategy, even though funds use it. I think there's a better one. And the better one is my one. I would say that, wouldn't I? Which is called value cost average. Now, the value cost average strategy is instead of putting the same amount of money in every month, what I'm going to do is I'm going to go back here and I am going to only buy when it goes down, i.e. it's cheaper than last month, okay? So red means no, green means go. Okay, so has this fallen as opposed to last month? Yes or no?
Yes.
Yeah, the answer is yes. So I'm going to buy. Okay, now let's go to the next month. Has it fallen as opposed to last month? Yes, it has. So I'm going to buy. Okay, now has it fallen in middle of September here? And by the way, you choose the date. It could be the first of the month, it could be the last of the month, you know, you choose. So what do you think? Do you think we should buy, yes or no?
No.
No. Okay. Yes or no?
Nope.
Yes or no?
Yes.
Yes or no?
Nope.
So it's pretty simple, yeah?
Yes.
So no, no, yes,
Yeah.
yes. Okay. And now what we're going to do is we're going to add one more thing to it. Okay. So we're going to go back now. We're going to say, not only are we going to buy when it's down, but if it goes down even more, I will get an average price, won't I? Between this price and this price. Would you agree? If I buy 100 here and 100 here, let's say £100 worth, would you agree that my average price is is definitely in the middle? Would you agree?
Yes.
Yeah. Okay. So what I'm going to do is I'm going to add a little bit more money. I'm going to add 25% more. I'm not going to double it because that's gambling. You know, you put in 200, 400, 800, 1600, 3200, and then it gets hairy. So I'm going to put 25% more. So not only am I getting a lower price, i.e. here, but I'm putting a little bit more so I get an even lower price, let's say to here. Okay, and that is, and if you just do that, you will do really well. You'll do really well. Now, there's other things to it. So for example, we only ever get in when there's a 20% fall from the top. So we never get in at the top. We wait until it falls 20%. Well, what if it doesn't fall 20%? We don't get in. We might get into Ethereum. Maybe Ethereum has fallen 20%. Okay, so we wait for a 20% fall, and that's when we start getting in. And the further, by the way, if it falls and keeps falling and keeps falling and keeps falling, what do you think we should do? If it keeps falling and keeps falling and keeps falling?
Keep buying.
Keep buying, because you can only do this, remember what I said to you earlier, with something where you've done your research and you know it can't go to zero. If you just get any stock that somebody says, oh, I've got a really hot tip here, mate. You go, oh, yeah, oh, what's that then? Well, it's going to go to the moon. You go, all right. And you do this strategy, you're going to lose all your money. It's got to be in the most solid thing possible. Gold, silver, commodities, anything that can't go to zero. An ETF, an exchange traded fund of lots and lots of different companies like the FTSE 100 can't go to zero. That means all 100 companies have gone to zero. Very unlikely. If you do this strategy right now in the market, in the next 5 years, you would have made a shitload of money.
That's a technical term, isn't it? Just so we're clear.
Very much so.
Yeah.
Very much so. Now, this is the opposite to everybody else, because everybody else, when it goes down, they panic and they sell. So what we do is we buy. But you see, because they want to make money fast. Question, Warren Buffett, what's his time frame?
20 years, isn't it?
10 years.
Yeah.
He says, I don't care if the market closes for the next 5 to 10 years. It's all noise. Well, I mean, I don't understand why we would be different to him then if he's a billionaire. I just don't, and he's made his money from there.
Fair.
Now, I know people want to make money faster. And by the way, if it goes straight up, then you're in profit. Now, we're looking for 50% profit on Bitcoin. So as soon as it hits 50% profit, then we're out. If you do this on stocks and shares, we're looking for 15. So let me recap. You wait for a 20% drop, and then you get in with your first amount, and you only get, by the way, I have more advanced strategies than this as well, where you make more money. So for example, are you okay if I go advanced for a little bit, or?
Yeah, we're all right with your time. I just want to respect your time.
Yeah. So basically, I love this stuff, right? So let's say it goes down, and then afterwards, let's say you only got in if it fell by 10% more than last time. So let's recap. It goes down by 20%, and you get in. If it goes 30%, i.e. from the top, 30%, you get in again. And you only get in again if it goes to 40%. And if it doesn't, what's it going to do? Well, it's going to start going up. You start getting into profit. And if you do this on 2 or 3 different really solid stocks, you will do really well. And sometimes it takes months, sometimes it takes weeks, and sometimes it'll take years. You know?
How do you said, go back to something you said at the beginning, because everyone here on this call is really busy and has a lot going on, right? We all have lots, family lives, we got multiple businesses, all that stuff. So when you're saying 20 minutes a day, or how do you set that up so that works?
So how do you set it up working out? You got to set a time which for you is the best time, because you know that's when you're going to do it. So for me, I have to do it in the morning, because if I don't do it in the morning, I won't do it. I just will not do it. Reading a chapter of a book, I won't do it in the evening because I'm lazy. I'll be texting. I just won't do it, right? So I have to do it first thing in the morning as part of my morning routine. So if that's the same with you, or if you have only time in the evenings, then but it's got to be the same time. So some people do it 8:30 in the evening when everybody's watching TV or whatever. Well, you're hardly doing anything. You're just saying, has it gone down or not? In reality, you could even set an alert 20% below. When it hits it, you get an email or a text message, so you don't even have to do that. I mean, you could almost fully automate this. If I were you, this is what I would do. I would learn this together with a family member, like if you have children, for example, encourage them to learn this and then get them to do it for you. That's what I would do.
Yeah, right. I have a son who's autistic and can follow rules better than I can, so that makes a great win-win for me.
Exactly. And by the way, this one is really easy to follow the rules, whereas the next one, the trading one, this was investing. The trading, but you know, in the trading one, we're looking for a lot of gains. You know, and this one here, this is the trading one, we're looking for 100% a year. But this is really where the 20 minutes comes into play. And all we really do is we use some very simple, it's all simple when you know what to do, right? I'm saying it's simple. We use an indicator called the RSI, and the RSI stands for Relative Strength Index. And there's 3 ways of using it, and one of the ways is as an oscillator. So what we're going to do is we're only going to get in when it tells us that it's oversold at this point here, This is a charting software. You can get it for free. It does it for you. So at this point here, that's the buy signal, right? The indicator tells you it's time to buy, so you buy the actual stock or crypto or whatever. So here's a concrete example. Let's say the crypto's gone down. Now again, we only do this on something like Bitcoin or Ethereum, where we're pretty sure, we've done our research and we're pretty sure it can't go to 0. Is there risk in this? There's always risk. When you're investing, there's always risk. Even though property people will say, well, but not in property, there's always risk, always. Even in a bank, there's risk because the bank might go down. Then you're covered up to 80,000, that's it. Okay, so let's just say this thing has come down to this point here and the indicator has gone below what we call the 30 mark, okay? That is our first entry point. If it goes above and falls below, it has to have done that. If it just keeps falling, we're not interested. If it goes above and falls again, that is our second entry point. If it goes up and falls again, that is our third entry point. Now, what's so clever about this strategy is it's a win-win strategy, because either you want to accumulate Bitcoin, so if it carries on going down, it doesn't matter, because I want to accumulate Bitcoin because I know the halving is happening, I know the institutions are getting in, I know mass adoption is coming, I know that, you know, it's a great thing against the crisis. There's so many different reasons. Or as you get in, it then turns and you make a profit. It is a win-win situation here, as far as I'm concerned, in my kind of investing ethos. Now that maybe was a little bit, was that too much? I don't know, that was too much, but no, it was all right? Okay.
Yeah, so what are you putting up on the screen, just so people can grab it? I'll grab it as well, actually.
Go on then.
Done.
Oh, hold on. Yep.
Cool.
These are our results in the last year or so. 29%, 10%, 16, 2.9. So 2.9 is a bad month, but that August is a bit, okay, September, October, 14, 17, 22, 3.5. So again, it's always like that. August, December is always like that. 11, 11, 12. I don't think this is up to date. I think we got a little bit more, etc. So that's this particular strategy. The other way of making money is by just getting dividends. And this is called staking your coin. Instead of putting it away in a wallet, you put it in a special wallet, which, I don't know whether you know this, but these digital currencies aren't just like some coin. They're programmable. They do stuff. Or they do shit is the technical term, right? They do stuff. They have smart contracts within them. Right? You know what a smart contract, have you ever heard of the phrase a smart contract in digital currencies?
No.
Okay, it basically is a vending machine. You don't need a judge in the middle saying, I'm me and that's the chocolate, right? You say, well, I don't need you. I just put in my money. The machine works out that it's the right amount of money. I go 1Z, because that's where the Coca-Cola is. And the robot gives me, that's a vending machine, right? You don't need anybody in the middle. Again, not centralized. You don't need a centralized system. So in the same way, a smart contract, okay, let me give you an example. Have you ever been on you wanted to go to the airport, they cancelled the flight. Have you ever been in that scenario?
Yep.
So what they do, this is really clever, what they do is they make an announcement, which half the people don't hear, which is over there is a stack of forms to fill out if you want to claim your money back. So half the people already didn't even hear it. Okay, so let's say half the people, they pick up the form. Now, they might lose the form, they might forget, they might fill it in, they may not. Then there's the post, it might get lost, it might not. Then the company might get, anyway, it's a whole thing about whether you get your money back or not. I'm sorry, but that is a smart contract. Mate, I paid for this flight. The flight didn't happen. The second it was cancelled, the smart contract should send my money back, because there's no gray area where the judge goes, my lord, I submit to you that this flight was maybe not cancelled. What are you talking about? It was cancelled. You don't need anybody in the middle. It's a smart contract. The moment it's cancelled, I should get my money back immediately in my bank account. Yes or no?
Yes.
And by the way, that's just one example. And that's why people are freaking out about the blockchain, because it automizes so many different things and it cuts out the middlemen. A lot of people are, you know, and the banks are jumping on because they're going to be left behind if they don't do something really, really fast. So anyway, so one of the things you can do is you can stake your coin, and that means that the coin is helping to maintain the blockchain, whether it's the Ethereum blockchain, or it depends on the coin, right? If it's Ethereum, it's the Ethereum blockchain. If it's Bitcoin, it's the Bitcoin blockchain. And you get paid, let's say 3-6%. Some of them more, but I'm always a bit, I think 3 to 6% a year is good when it comes to stuff like that. Final two slides. Well, this is more what we do in the crypto club is we basically have a buyers club, because in order for a cryptocurrency to happen, it needs to have had an initial coin offering, and then there's the pre-ICO and the pre-ICO. So you get in at a discount if you get in early, but you have to pay a lot of money, 50K, 100K, sometimes $1 million, and most people don't have that kind of money, or they'll have it once or twice, but then they'll run out. So what we do is we have a buyers club where everybody puts a little bit in, so we get the minimum amount, and then we get the discount, which is pretty cool. So that's another way of making money. And then the fifth way and final way, and I'll finish there and then answer any questions that you have, is just buying into companies right now that are already public, that are taking advantage of blockchain technology, right? So if Facebook is launching Libra, you got to think, should I buy Facebook? Now, don't just buy Facebook. Do it with a strategy. Wait for it to fall 20%. Won't be difficult right now. There's no way that Amazon is not bringing out its own coin. There is no way that Jeff Bezos.
I've thought that. There's no way they're not going to do that, right?
Of course. Every time you buy 5 things, you'll get a coin, and then you can use that coin. And of course. Listen, when you go into Starbucks, do you not, get a little stamp? That is just a reward system, right? This is just the reward system 5.0. That's all it is. Because these tokens can only be bought and can only be used in that particular ecosystem, can't it? Yeah. I can't go with my stamp. I can't go to Costa and say, oh, I've got this thing from Starbucks. And it's the same thing. An Ethereum token is only to be used in the Ethereum blockchain. Anyway, I think I've spoken enough. But do you have any questions?
Well, let's all breathe for a second, because that was like one of the fastest hours ever, right? It feels like they just got absolutely brain exploded with that, like in the last hour. Anybody get their head exploded, right? So
a little bit, maybe, yeah.
No, it's cool, man. Seriously good, right?
Why can I not see you anymore? Do I have to stop sharing, or that's it? Yep.
Yeah, you can do it if you split screen.
But it's a fascinating world that I would suggest that you get into and learn something about, because you don't want to be left out. You say, oh yeah, I remember, I heard about that thing, and it's gone up 10,000%.
So I think Jonathan had a few questions. Jeff's asking me something. Jeff, you all right if I ask that one for everyone? Because I think it'd be okay, cool. Jonathan, you want to go first? You had a question? You're muted, Jonathan. Yeah, it's like, seriously. Right, there you go.
Give me a minute, because there's a million things I could ask, so I want to make sure.
Only million. Excellent. Good stuff. Great. So Jeff had a question, which was, okay, how do people kind of learn from you and work from you? Because clearly that was an hour, and like, I would think my head's exploded. I'm like, oh, okay, great. I want to learn more about this subject. I want to get, how do people learn from you? The reason I came to you was because I trust you in a market that's full of charlatans and full of guys who do sham stuff. And you've trained thousands of people in the UK for the last, since I've known you, and that's what, 15 years we've known each other. So like, how do people engage with you? If it's crypto, like how do they find out if they learn this stuff? Give us a bit of like how people.
I would get into cryptos. I would.
Right. So how do people continue that journey with you if they want to find out more and get educated? So they can.
So a couple of years back, we were one of the first to set up a club. So there's no physical events. Everything I do is physical, but this one here is all online. Where we just offer you everything that you need, like everything. Like my team, this is the ethos of my company, Investment Mastery, is all about support. Because everybody, like, they might be really good at this one thing, but they might not be good at this necessarily. So what we do is we have an A to Z online course, which is a living and breathing entity. So it always gets updated. It's not just like this old thing that gets done once. Then every 2 weeks, we have a 90-minute session, which is about what coins are we getting into and why, what ICOs are we getting into and why, what public company, the things that I talked about, what are we staking, what the 5 things that I just talked about and why. And then every other month, we also invite a speaker who maybe has got something really interesting, like a really interesting angle, or, and this is what I'm keen on, has got a new ICO, a new cryptocurrency, because I want to get in to the Facebook of blockchain. I want to be in that dormitory with Mark Zuckerberg. I want to get in at the middle. I don't have to put in a lot of money, but I know that in the next 15 years, it'll make me a couple of million. That's kind of what I'm looking for. You know.
Smart. So how do we find out about that? Or have you got a link, or is there somewhere where we can send people if they want to find out?
Now, at this stage, I should probably say yes, but the answer is no. Not really. I mean, what we do is we do webinars explaining some of the stuff that I just explained, and then we make an offer. That's what we generally do. So we don't do stuff like this.
So this is my group exclusively, and these are the top. So can you and I work out something that we can put together so that for those who want to get in, they can get in?
I mean, you're very lucky in the sense that we have the coronavirus special right now, where, as far as I'm concerned, we're freaking giving it away, and I hate it, but it is what it is, you know. So normally it's like $2,000 for the year, which is, or I also think it's nothing already, but you know, general public, blah blah blah. And we've got a coronavirus special, which is 970 plus VAT, which is just hurts me, but just I hate it. But anyway,
for a year's membership.
A year's membership, yeah. So what happens is you're part of a Telegram group as well. So our trade of the day goes on there. So everything that my traders are getting into, you'll be notified immediately if you want to. We generally do one a day or one every 2 days. We have sessions that you can jump on a Tuesday lunchtime, Wednesday lunchtime, or Thursday lunchtime for half an hour, where you just come on. You can come on to all of them or none of them. It's up to you. Just ask a question. Listen, I'm stuck. This wallet doesn't work. Why not? What's going on? And they'll just jump on there with you. It's a group thing, though. We have everything. If you have an idea that you think will help the club, we'll probably implement it.
So what? Okay, so we'll sort something out in terms of like how people do that and stuff. Yeah, or send me the link for it, or if there's a link to join up, or your
Sure.
sales page or whatever would be great. Which is really cool. So I mean, the other questions is what tools? Like, give us your top 5 tools that everybody should be using.
Well, you need TradingView for sure.
Right.
TradingView is the charting software. Wow, they have nailed it. TradingView. It's free. It's amazing. It's incredible. You're going to need a broker. Now they're called exchanges. So I already gave you the exchanges. You need a fiat exchange. I mean, all of this is obviously in the course and everything, but you need that. And then the other thing is you just need to spend like 20 minutes, whether it's every day or every other day. But if I were you, I would do it with your family. If there's any way you could do this with your family, I promise you, I don't know whether you've got kids or whatever, they latch onto this stuff so fast. They just go ding, 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 ding like that. And it's a great thing to do together. And, you know, there's this thing where we say, you know, families that learn together, they stay together, they stick together. And I learned from experience that if you don't learn together, you tend to kind of, you know, you've got to have some common ground. I think this is a great one because most people don't talk about finances. And it's so cool for your kids to learn. I mean, I don't know, none of you might have kids, I don't know, but I might be wasting my breath. But it's so cool for you guys to learn this together because they're going to be set up for life with this skill.
I was going to say, in terms of the acquisition of skills, teaching your kids this stuff young, like game-changing stuff, right?
Game-changing stuff. The other thing is you can actually do some of this in an ISA. Might be too small fry for you guys, but it's still 20 grand per adult per household, don't forget. So there's 2 of you, that's 40. If there's 3 of you, that's 60. It's worth using these little things because, you know, and there's I mean, I do everything in a self-invested personal pension. I wouldn't give my money to anybody. No chance. So you can do all of this in a SIP as well.
Great call, Marcus. Give Marcus a huge round of applause, please, ladies and gentlemen. Fantastic.
Take care, everybody.
All right.